All right. What's up, traders? What's up, tycoons? Coming at y'all with a viewer request on ticker symbol LIFE. We're looking at the Life token right now. If you have any requests of your own, all you have to do is comment down below. I'll be happy to make a video on it as soon as I can. In today's video, we're going to go over a couple strategies that you can use to help identify and really understand price action in the cryptocurrency market, and give yourself a couple weapons that you can use in the battlefield and battleground known as trading. I like to say it's like going to battle, it's like going to war, and you need to have the proper weapons at your disposal and know how to use those weapons so that way you can increase your odds of success in the battlefield and really give yourself an edge. You're never going to be a successful trader or a successful investor without an edge. And in this video, we're going to go over a couple tools that you can use to give yourself an edge in the market. Okay, so smash the like button, subscribe to the channel if you're new. And what we're going to do is we're going to take a look at these three levels specifically right here, the 38.2, 50%, and 61.8% retracement levels. This is using the Fibonacci tool right here. All right, and these are very, very important. We're going to explain why. And then we're going to look at the relative strength index down here. And you can use this to give yourself a couple signals, whether things are overbought right here or oversold right here. And also we're going to point out divergences and explain what divergences are, right? So what we're going to do is we're going to break down the current price action and show you guys what we're looking at for the potential, to the upside and the downside. And then we're going to go into the past of the chart and look at how these strategies have worked and why they work so that you truly understand what is going on. So again, looking at these three levels right here, these are our three major retracement levels for this move to the upside, right? So pay attention to this green line right here, right? I know there's a lot of lines, there's a lot of stuff on the chart. I'm going to break it down super simple for you guys. So what we're looking at is we're tracking the swing high or the swing low right here up to the swing high. So we see we have this large impulsive move to the upside. Okay, we're retracing to our three healthy retracement levels. So what this means is we're either going to get this green line here to play out, or we're going to get the red line here to play out. Okay, we're going to come up, retrace, and if we hold our three retracement levels and get a bounce to the upside, that's going to be just a simple healthy retracement to our retracement levels for a continuation of the trend. In this case, we're in an uptrend. We're going to retrace and continue that uptrend and head higher. Now, if we break our three retracement levels, that's when you look at a reversal, right? So that's when we would see something like this, where we come down, we bounce a little bit, and then we break through our retracement levels and head back down to possibly retest our previous lows or create new lows. Okay. Now, if you take a look at these circles right here, this is a really good example. Okay. So we have a high right here, and then we have a higher high right here. So clearly the token is in an uptrend. But if we look at our relative strength index, we can see there's actually a divergence, right? And in this case, it's a bearish divergence. So a divergence is going to be when the token is doing one thing, in this case going up, but the relative strength index is making a high and a lower high at the exact same points that the token itself made a higher high. This is what's known as bearish divergence, okay? And you can see that the relative strength of this token is decreasing as the price of this token is increasing. That's what's known as bearish divergence. It's an indicator you may see some bullish or bearish activity in the future. And you can see we've actually dropped over 50% since that bearish divergence indicator. Okay, so we've broken down how to use the retracement levels. We've gone over a bullish or a bearish divergence in this case, and we see if we hold these levels, most likely we're going to get a continuation of this trend to the upside. And if we break these levels, we're going to get a reversal. So let's dive back into the past a little bit and go back to the beginning of this chart so we can really see how valid these strategies are and why they work. Okay, so what we're going to do is we're going to dive into the beginning of the chart on TradingView. And what we're looking at, instead of taking the swing low to the swing high, we're taking our swing high, connecting it down to the swing low. So clearly in this case, we're in a downtrend, right? And then we're going to get a healthy retracement up and continue that trend, right? So notice how we make a low and then we continue that trend of bearishness and we actually create a lower low right here. Now, we get rejected here at our 61.8% retracement level. These are the three most important retracement levels. There's never a guarantee that we're going to, which level we're going to hit, right? In this case, we come to the 61.8 right over here and we get rejected and head back lower and continue that downtrend, create a new low. But look at your relative strength index right here. This green line right here is the oversold level. That's 30 on the relative strength index. And we can see that we actually approach oversold, right? So typically you never want to short something and you never want to short something when it's oversold, and you never want to long something when it's overbought, right? And so here's a very good example of, we come down to these oversold levels. And a lot of times when you're oversold, there's a good chance that you could have a slight bounce or recovery in the price of the token. And so we take a look and we see once we're actually oversold right here on this candlestick, we actually get a very nice rally of a 139%. So you can use this as one of your weapons, as one of your tools to say, hey, maybe I could go long here. Oh, we're extremely oversold at this level. There's a chance that we could bounce, right? Now, no strategy is going to be 100%. So you have to keep that in mind. But, again, this is just one of the things you can do. Now, what we've highlighted here is actually a bullish divergence instead of a bearish divergence, right? So we have the circles, okay, indicating we have a low here and then we have a lower low right over here. So clearly the token is in a downtrend. The relative strength index is going to measure the relative strength of a token at its given price. So if the price of the token is dropping, the relative strength index should be dropping as well. In this case, it's not. It's actually increasing slightly. So we have a slight bullish divergence. If we zoom in a little bit, we can see that at this point when the token made a low, right? When the token made a low right here, we actually made a higher low on the relative strength index instead of going lower and heading down. Now, that's an indicator that you may see some bullish activity. And sure enough, we do get a nice little bounce here as well. And we bounce up about 85%. Now, what do? We get rejected at our major retracement levels, right? So if you're going long on something and things are in a downtrend and you're just trying to catch a bounce, you can use the 38.2, the 50%, and the 61.8% as levels that you need to be cautious of and start protecting your trade if you're in these trades. You see here, we come up to the 38.2. That's when you can set a stop loss or some form of risk management to protect your trade. And we do climb up a little bit more, right? We get close to the 50% level, but we don't really hit it. And what we do is we continue the downtrend, right? As notified by this, pink arrow right here. We come down, we retrace up to our retracement levels, and we continue that downtrend and we make a new lower low. Okay. And really, it's no surprise that we've been in a crypto winter and a bear market, and we continue to see this happen. Right. And so, what do you know? Ultimately, again, we take our swing high down to our swing low. We come down, we retrace up to our 50% retracement level, and then we continue that trend and establish a new low. Right. We have a low here. We retrace up and then make a new low. And that's how you know we're having a trend continuation by rejecting our, major retracement levels right here. At any given point in time, if we break through these levels, that's when we can look for a reversal, right? If we break through those levels and they're not valid resistance, then that's when we can get ourselves a reversal. Now take a look here. Again, right here, we're oversold, right? We're extremely oversold on the relative strength index. And what do you know? We end up getting a nice little bounce, right? So if you want to say, hey, we're super oversold on the relative strength index, let me go ahead and enter here. And then you see we end up rallying about 95%, ultimately up to 130% at our 50% retracement level. And then, again, as I mentioned, this is when you want to protect your trade because we're at our major retracement levels. There's a strong possibility if we reject these levels and don't break through that we're going to continue this downtrend and create a new low. Well, take a look here. Now we're getting some bullish divergence, okay? And we can see over here, we're oversold again, and we get a nice little rally, okay? It's not as impressive as the 100% plus rallies, but again, we're seeing that we're oversold. So again, this is not a time when you want to go short. This is a time when you could potentially be looking to go long. Now, this time is a great example that not every time is going to be a huge success. From the lows to the highs right here, we got about 44%. Now, 44% is a great trade. If you're not able to capture that whole 44%, and let's say you enter in around here and you're only able to capture about 15 or 20%, that is still a very, very good trade, right? What you're doing is you're focusing on consistency, right? And so you don't want to be that trader that's out there searching for one play to get you 1000x, right? It's better to, compound your gains and be able to focus on getting a 10% gain, a 20% gain, a 40% gain. And once you consistently can do that, then you have a much better odd, or rate of success. And then that will further increase your odds to getting, that 1000x investment that you're looking for, right? Because too many people have been fooled and captivated and really just get stuck in the fantasy of looking for these massive 10x 100x 1000x plays, and then they end up holding the bag and selling for a massive loss just because they didn't really have an edge going into the trade and kind of buying into things blindly, right? So, again, none of this is financial advice, but really this is just more informational to really help you guys out and, help give you guys an edge. And, by using some of the weapons and some of the tools and strategies that I use that have helped me gain an edge in the market. So here, what we can notice is if you take a look at the circles, we have a low, right? And then we have a lower low. So clearly, again, the token is in a downtrend. If we look at our relative strength index, we're flatlining right here. Okay. We have a low, and then we have a very, very slightly higher low. It's basically an equal low right here. So we're seeing a divergence, right? Where, the token price is dropping, but the relative strength of this token is not dropping. So the strength isn't dropping. The strength is remaining consistent as we're dropping down and creating lower lows. That's an indicator we may see some bullish activity in the future. And off of that bullish divergence, you see we get a very nice rally, 223% up to the highs right there. And what do? We come to our major retracement levels. At this point in time, we're getting rejected at our 50% retracement level. And you can see we come down, we retrace, we hit our 200% plus play, and then we come down. But notice what we're doing here. We're actually not creating lower lows, right? So, that's how you establish like if the trend is continuing, right? If you make a low here and then a lower low. But what we actually do is we make a low and then a higher low. And here's a very good example of getting the reversal and breaking through our major retracement levels. Over here, we break through our retracement levels. We pull back and then we continue higher. So we actually make a high and then a higher high over here and another higher high. So that's a very, very great example that, not every time you're going to come down, get rejected here and continue the trend and head down lower. Sometimes you are going to break through these retracement levels. And once you break through those retracement levels, that's how you can spot a possible reversal. Right here, we have an example of a bullish divergence again, where we just have a low, a lower low, and then we have equal lows right here on the relative strength index. This move wasn't as strong as the others. Again, no strategy is going to be 100%, and you can never predict how much the movement's going to be. But from this one, from the lows to the highs, that was 50%. And if you're just looking to make 10% gains, once a week, in a month, you'll have 40% on your portfolio, right? And these are some of the strategies that can help get you there on, your journey. Okay. So over here, we can see if we take a look at our relative strength index, we see that we're actually very, very oversold. And what we've done is we've actually made a higher low, right? So we have the low here, we make a higher low. So we're not actually in a downtrend anymore, right? Overall, the scheme is down. But, on a shorter term basis, we see that we're actually coming up here, right? And we're actually making higher lows. We're super oversold on the relative strength index. And if you would have used that as a time to buy in, that would have, benefited you very gratefully as, we ended up breaking through our retracement levels and having a very nice rally from the lows to the highs. That was over 500% right there. Now you could have taken profit at any one of these points in between here. What we're going to look at next is a very nice example of using the retracement levels to the upside, right? We've gone over how we can use the retracement levels to continue a downtrend. Right here we can see we actually hold our three major support levels, retracement support levels, taking the swing low up here to the swing high. We see we come up, we retrace, and then we continue up higher and continue that trend to the upside, right? And that's indicated by this lighter green arrow. So now that we've broken that all down, we already looked at our bearish divergence over here, and showed how, when you're overbought, typically you don't want to buy, right? We were very overbought at these levels, and then it ended up dropping very, very hard. If we take a look, that was a 40% drop right there. So, if you would have if you would have FOMO'd into this and bought it this when it was extremely overbought, let's say you put $10,000 into this and then it drops 40%, you're most likely going to panic sell right here. I'm not saying that you would for sure, but a lot of people will panic sell in situations like this, right? So again, breaking down what we're looking at right now is we're looking at a healthy retracement and to our support levels right here. If we break through these, right, which we're currently trading right at our 61.8% retracement level, if we hold these levels and can get a bounce, there's a possibility we can continue this uptrend to the upside. But as soon as we break through these levels, we're most likely going to get a reversal, right? And it's not going to be a continuation to the upside. It's actually going to be a reversal, and we could possibly come back down to test our previous lows here or our previous lows here. So thanks for watching the video. Smash the like button, subscribe to the channel if you're new. Don't forget I do those viewer requests every week. So if you enjoyed this video and you want to see your token broken down in the next one, all you have to do is comment down below and I'll be happy to make a video on it as soon as I can. And if you made it this far in the video, thank you guys a bunch. I think you're really going to enjoy one of these next two videos as well. So make sure to click on those.